Hey, good afternoon, everyone. Thanks for coming. Um, a lot of traders are still coming into the room, so I'm going to give it another 60 seconds and then we're going to start. Hey, good afternoon. Thanks for coming to the webinar. And this is Mark from Right Line Trading. And just going to go right to the mandatory disclosure. All signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational and demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers in the futures or forex markets and stocks, nor for any profits or losses. Participation in trading in all these markets involves substantial risk, and therefore participation is not for everybody. I have to carefully consider your financial position before taking a trade, do your own due diligence, and Right Line Trading, those of us here, are not registered financial advisors and not licensed commodity trading advisors. Now, I'm going to skip my own bio here just to save some time. And what I want to introduce you to is our Unorenco trading system, a little bit different than anything that you've ever seen before and formatted in a way that you may not have seen before either. The software is really going to give you precision, exact entries, and that work. And it is used by many top step funded top step traders. We have lots of testimonials from them, which I have not posted. Now, I'm going to skip this as well, just for time, because I got a lot of stuff I want to cover. Now, you can trade futures, forex, or stocks with this, and all the indicators have forward-looking ability. They lead price, they do not lag price, and the reason that is true is because they all use data from 2 higher time frames. None of them look at price on your trading chart. And that's what gives them their forward-looking ability. If momentum on your 2 higher time frames is up, it's one force that's going to help determine that off the right edge of your chart, price is going to rise. And we're going to look at 3 key forces that move price. And the whole purpose of the software is to predict the future movement of price off the right edge of your chart. The time frame is irrelevant. It doesn't matter whether you're trading a really long time frame or a short. The forces that move price are universal, and they're the same in for any financial instrument, but whether it's forex, whether it's futures, a forex pair, or an individual stock. Now, the type of bar that you use, I think, makes a difference, and I'm going to make a recommendation. You don't have to use any given kind of bar, but I would recommend. I'm going to show you why I recommend it. The reason I like range bars, or I used to trade range bars, is because they're time independent. There's only one variable that goes into determining when the next candle is going to form. I know a lot of people like time charts, and you can use time charts if you like. But what I like to do is create a candle that only has one variable that determines when the next candle forms, and that is how far the market moves. If this is a 15 range candle, it's going to move. You're going to create a new candle only when the market's moved 15 ticks, 15 pips, or 15 cents. And time or ticks is irrelevant. So really what it does is it tells me how far the market is moving price-wise, and it gives me a nice measure of volatility. If I have time as a factor, as well as price movement. The candles can be big or small, depending on how far the market is moved. But I like each candle to be the same size, and I think it defines price action really well. But in the last 6 months, we've moved to Unorenco, and our Unorenco bars are modified Unorenco. They're very different than anybody else's Unorenco candles. I don't think I have them formatted on the chart, but these candles actually show you a wick inside them. And they define the trend really well when there is one. And they also do a really good job in defining chop. And what they do is they filter out all the noise that you get in the market when you trade time tick, range, or regular Renko. Now, Renko filters out a lot of noise too, but I think too much noise because you don't get any wicks. With Unorenco, you're going to get a full wick and a wick inside the candle body. Now, there's a give and take. For Unorenco bars, the weakness is they do obliterate price action. I mean, who's in control of the market? The bulls or the bears, and price action helps you determine that. You cannot evaluate Japanese candlestick patterns, although you can evaluate some, but you can't see an engulfing candle, you can't see a dark cloud cover, can't see a piercing candle, a doji. Cannot see these things when you trade Unorenco. You can't discern between a rising and falling triangle. You can see channels, but not quite so well. So you really need powerful leading indicators to signal an entry. But here's the key that I think everybody should understand. The market is different now than it was 20 years ago. There's a specific reason why Japanese candlestick patterns, Elliott wave, Gann theory, even Fibonacci, because I'm not a Fibonacci fan. I mean, I don't want to diss it because I know many of you may trade it. But the reason that these things just don't work as well as they did is the original premise upon which they were built was that the power of each individual buyer was approximately equal to the power of each individual seller. 400 years ago, when the Japanese rice traders created Japanese candlestick patterns, that was definitely the case. I mean, obviously there was no institutional money, and however they used them, they were very, very accurate. Divergent signals were very, very accurate because the power of each bull was approximately equal to the power of each bear. But now that institutional money is such a large percentage of the overall volume for every market, including the volume on every stock, it's really institutions that determine the trend. And they're going to run over Japanese candlestick patterns when they come in. They're going to run over rising and falling triangles. The patterns still have value, but they don't have nearly the value or the predictive power that they had 20 or 25 years ago. I mean, I think that trading divergence a long time ago was very good, but now divergence signals fail often. Sometimes they make it, sometimes they don't. That's the kind of signal you don't want to trade. You want to take a trade where you can assess risk on every trade. You have a great opportunity to determine whether or not it's going to fail or it's going to win. You can't do it on a divergence signal. And it's all because of the institutional money that really drives price on almost every market. Now, the strength of Unorenco bars really is they filter out noise. That's the major strength. They really help you define a trend. And if you have leading indicators that can get you an entry, they're going to give you a superior trading opportunity. They're going to give you a runner. They're going to get you the long trades. And each Unorenco candle needs an optimized input for each individual market. I mean, you can't trade the same size Unorenco on a $20 stock as you could on a $1,000 stock. That's true almost for every type of candle. But in order to get the right inputs, we have to optimize them for you to give you the right sized candle in the right proportion. Let's skip these. And what I want to do is go to the 3 line, because really we've had an enormous demand for this indicator back. And the first line is an assessment of momentum on a multi-time frame basis. The second line is an assessment of stochastic on a multi-time frame basis. And the third line is the assessment of order flow on a multi-time frame basis. Now, how you calculate these are variable and they're tricky. And I want to show you how we do it. Now, order flow is really the toughest parameter to sort of wrap your head around, because this is the candle delta, and you can see that the delta here is plus 29.85. It's a little blurry. I'm sorry for that. And that tells you that there are more sellers on the buying side of the dome than there are on the selling side of the dome. So you would think that a positive delta would be associated with an up candle. And it was that simple. I mean, we'd all be billionaires. And unfortunately, that's not the case. And that's why so many traders utilize order flow incorrectly. Stack buying and stack selling does not work. Here you can see that there's 2 tick pip or cent levels that have a significant imbalance in the sellers on the seller side. Here on the buyer side, there's just not enough power at each individual price level to really determine the direction of a candle off the right edge. And even the market delta, you'll see, doesn't have that power either. Now, here's a positive delta on a down candle. Now, if there are more traders on the dome on the buy side than there are on the sell side, why should you get a down candle? And the reason for that is really simple, and it's transparent. And what causes this is that the sellers are simply more aggressive than the buyers. Buyers may be more plentiful, but sellers are so positive the market's going to fall that they're willing to take a lower price and they're going to aggressively sell the market. So even though there are more buyers and the market delta is green, the candle closes to the downside. So if you use the market delta as an absolute assessment of the direction of candle close, a lot of times it's going to come back and hurt you. And if you look at a whole series of candles and their associated deltas, you can see that there are enough candles that close in the wrong direction to make the assessment of any individual delta a little bit chancy in determining the direction that the candle's going to close. So you just can't use it. Now, if you take this, and this is what you're going to see on a lot of charts, this is just the absolute value of the delta going up or going down. Now, just because the delta is rising here doesn't mean that price is rising. Because remember, you've got that positive 222 on a down candle. So this rising chart telling you, well, the market's got more buying pressure, doesn't tell you the direction that price is going to go. That's the problem with trading the market delta using stack buying and stack selling. Doesn't work because it doesn't take into account the aggressiveness of the buyers or sellers that are sitting on the dome. And that aggressive component needs to be taken into account. So, but this is still a valuable assessment. And what we've done here is determine that one standard deviation's worth of data works. So if you look at that bell-shaped curve, 66 2/3% of all market deltas will determine the direction the candle is going to close. And the outliers, the data that's greater than one standard deviation, is what we have to get rid of. Because if we can get rid of that, then we can use market delta as an accurate assessment to help us determine whether there's real buying or real selling pressure in the market. So what we do is this. We look at the delta of each candle on the two higher time frames. Now for Unorenco, we just look at the two higher multiples. We look at 2 times and 3 times. If you're trading a 2 Unorenco, we look at a 4 and a 6. If you're trading a 4, we look at a 6 and an 8. So we don't look at the deltas of your trading chart. We only look at the deltas of your higher time frames. And then we put each delta value into a 15-period moving average. So what you get is the average delta value going back 15 periods. So that smooths the data and tends to really minimize the impact that those occasional outliers have. So that the slope of that 15-period SMA gives you a very, very accurate assessment of whether there's buying pressure or selling pressure in the market. Now, when both 15-period SMAs are sloping up on the two higher time frames, the bulls are in control, and the delta, the order flow line is going to be green. And when both 15-period SMAs are sloping down, the bears are going to be firmly in control, and the line is going to be red. Now, when the 15 periods are not in agreement, they're going to be yellow. And if you look, now I took off the instrument because it's irrelevant. I took off the size of the candle because that's also irrelevant. I mean, those are not parameters that I want you to pay attention to, because it doesn't matter the instrument. That instrument doesn't matter, and the size of this candle doesn't matter. It's a Unorenco candle, but it could be a 32 Unorenco or a 2 Unorenco. It also is irrelevant. And you can see that here is the line that assesses order flow. And when both 15-period SMAs turn up, the line goes green. And you can see it's going to go green before price turns. And it's going to turn price to the upside. So it gives you an absolute direction to trade. Now, I'm going to give you other reasons why you can't take this counter trend trade later. But even though order flow turns, you just can't take this trade. And you're simply going to take this trade long. Order flow here has turned, and this is a counter trend trade, which I don't recommend taking. We want to trade in the direction of the trend, but if you're going to try, I mean, traders here tried to call a top, and they all got run over. If you really want to keep trying to call a top, at the very least, you have to wait till order flow turns. Here's another example. Order flow turns, SMAs head up, and they're going to put significant buying pressure on the market. Now, all of these traders caught in the counter trend direction are all going to get stopped out. And we like them to be caught this way, because when we run them over to the upside, as we stop them out, they're going to help propel the trade back to the upside. So every time we get a counter trend trade, a bunch of counter trend traders coming in to trade against the direction of order flow, it's great for us. We have an absolute direction. 1 out of 5 times they're going to call a change in direction. 4 out of 5 times they're just going to get run over as the trend is going to continue, because really only institutional money can cause this kind of buying pressure or this kind of selling pressure. And really, what do the indicators really need to be now? Proxies for institutional money. If we can track the direction of big money and trade 1/2 step behind them, that's how you really make big money and you get big winners. So let these traders trade divergence. Let them trade Japanese candlestick patterns, Elliott wave, Gann theory, whatever they want that's telling them to call a top here, call a top here. They're consistently going to get run over and run over and run over. Eventually, they'll find the top. Here's another example. Order flow leads price. You get the turn and the move up. There's your counter trend group of sellers caught. They help propel the trade up when we're in right after they are to run them over. When the line is yellow, you just don't trade. When it's red, you can only trade short. And when it's green, you can only trade long. Trading against this direction is very, very risky. It can be done on occasion, but it's associated with substantial risk. And the thing is, our goal as day traders or swing traders is not to get winners, believe it or not. It's to avoid losers. If you can avoid losers, you can make a huge amount of money. That's how you become a professional trader, by sidestepping all the risky trades. Now, when the line keeps changing color, now when you only have one line, it's tough to know when it will and when it won't. But it defines chop. And when you get chop, you just don't trade. And then when you get order flow aligning, big money comes in, creates tremendous buying pressure, and price flies to the upside. And remember, the assessment's made off the 2 higher time frames. It has nothing to do with price on our trading chart. And here's momentum. Now, momentum is really done the same way. Now, for this particular indicator, we use the slope of the MACD. And you'll see on the 3 line itself, it's a little more complex than I'm going to tell you. But we simply look at whether or not the MACD line is accelerating away from the signal line or accelerating towards the signal line. If it's accelerating away from the signal line, momentum is going to the upside. If it's accelerating towards the signal line, momentum is heading to the downside. Now, momentum is a second order derivation. It doesn't measure speed, it measures change in speed. So actually it's measuring the velocity or the change in speed of price as it moves to the upside. So if momentum is increasing, price is accelerating to the upside. If momentum is getting greater to the downside, price is accelerating to the downside. If price is moving up at a constant speed, momentum is constant. So it's a really nice parameter to track because it is that second order derivation. Now, traders look for MACD divergence. If you trade a divergent signal, you're going to get stopped out a lot because you got to trade in the direction of institutional money. And they'll step back for a second, divergence will occur, you'll take the counter trend signal, and then you'll get run over. Now, again, it only assesses momentum on the 2 higher time frames. I mean, one of the theses for the creation of this software is we don't look at almost anything on our trading chart because it doesn't have any forward-looking ability. The only thing that has forward-looking ability is what's occurring on the higher multiple time frames. So when both momentum lines or MACD lines are accelerating away from the signal line, you get a green line. And when both momentum or MACD lines are accelerating towards the signal line, you get a red line. And when the MACD lines are not in agreement, you get a yellow line. Now we can combine order flow and momentum. And they both must be in agreement, or we have equal forces that determine how price moves out into the future in non-alignment, and price is most likely going to chop. So here, when you get order flow and momentum aligned, you have to trade short. And when you get order flow and momentum aligned to the long side, you have to trade long. If you try to take a counter trend trade against this multi-time frame assessment, the likelihood is very high that you're going to get stopped out. And really the object of what you're trying to do is avoid losers. I mean, if you think about it, if you can get only 6 or 7 winners a week and trade 4 contracts, say in futures, or 2 or 3 lots on the Forex, full lots, or not, just a small number of shares and stocks, you're going to make an enormous amount of money as long as you can keep your losers extremely low. You're not going to get 0 losers ever, but you want to keep your losers to less than 1 out of 5 trades. You want to trade 80% or better, and that will that's what's going to get you where you want to go. Here's the same thing. Now you have 2 lines. If they don't align, you can't trade. When they do align, down you go. When they do align green, up you go. And down you go. And up you go. And it keeps you in a trade. When they stay green, don't leave the trade. Now you still have the potential to get stopped out, because you can't totally avoid those counter trend traders coming in and popping a reversal candle on you. If they do, you just take the next candle in and go right back up, because you're going to run them over. Running them over is going to stop them out, propel the trade up, and you're still trading in the direction of significant buying pressure. Price is accelerating to the upside, dual momentum SMAs. Order flow is telling you significant buying pressure as well, and price is going to continue to rise. So if perchance halfway through you get a couple of red candles, good. It'll stop you out, but you're still going to have a great profit, and then you're just going to look to go right back in and ride the trade back up again. Now here it's really easy to see chop. It's real simple. You don't have any alignment, green, green, or red, red on a pivot to take you in any direction. Now the last thing that we look at is stochastic. And the stochastic assessment is relatively, that's a very straightforward assessment. And when the stochastic line is accelerating away from the signal line or above the signal line, stochastic is positive and you're moving to the upside. It's also a momentum assessment, because stochastic does assess momentum. And when the stochastic line is crossed the signal line and is moving away from the signal line, then you're going to get that dual stochastic signal red. Now, what makes it a little more complex is that when stochastic goes above the 80 line and locks, that line is going to be green. It doesn't matter anymore whether the stochastic line is above or below the signal line. As long as it's above the 80 line, you've got a lock to the upside. In between the 20 and the 80 line, the assessment's going to be based on whether the stochastic line's above the signal or below the signal line. Once the stochastic line drops below the 20 line and goes into oversold territory and locks below 20, we make the assessment that there's significant selling pressure. We don't care anymore on this assessment whether it's above or below the signal line, as long as that stochastic line stays below 20. And we do that on both our higher time frames. Again, there's no assessment made off our trading chart, because all that's going to do is give us no forward-looking ability. So when stochastic is greater than 80 or less than 20, when the stochastic lines are overbought, the line is always green when they both are overbought. When both stochastic lines are both oversold, that line's always going to be red. It's not going to be looking at the signal line. Between 20 and 80, it's going to be whether the stochastic is above the signal line or below the signal line. If it's above on both, it's green. If it's below on both, it's red. And when they're not in agreement, the line is yellow. So now we have 3 lines. And it's a lot easier to determine CHOP. And what we do is we look for the entry on, we look for the alignment red, 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 or green, green, green on a pivot. Now, let me see if I go over that here. So when all 3 lines are in place, the assessment can be a little bit confusing because the MACD line has an additional component to it that I'm going to show you now. So what we do is we project the results of the 3 line onto the candle body. And we don't even care anymore about the color here because the results are going to be determined by the candle halo. Now you can determine the thickness and the color. I just determined this to be blue for the up. Black is neutral, and yellow is when all 3 of those forces are aligned to the downside. Now here is why the candle halos are more accurate than the actual 3 line. We put 2 components into the MACD line. The MACD line can be heading away from the signal line, but it may not have a crossover yet of the signal line. So we didn't know whether to assess momentum to the upside only when the crossover occurred or when the when the MACD line was just accelerating away from the signal line. So what we did was we decided to project onto the 3 line just an acceleration to the upside only when it crosses the signal line. So you're going to have some areas where the MACD is yellow because it's accelerating up, but it hasn't crossed the signal line yet. But if you look up at the candle body, it's going to be blue. Because what we determined is on the candle body halo, we're just going to use the direction of the MACD and not care about whether it crosses the signal line or not. So the candle halos may be a little bit different than the 3 line itself, because sometimes you're going to get a yellow momentum assessment because the MACD is heading up but hasn't crossed over yet, or heading down but hasn't crossed over yet. And it's still going to give you either a red, in this case a yellow, or a blue halo. But you can see how when you get the blue halos, the market is going to trend up. And when you get the yellow halos, the market is almost always going to head down. Now, there are going to be some areas where there's no alignment at all. And that's where you're going to get the black halos. Now, in real time, you're going to see this is very, very rare. Now, as far as an entry is concerned, you just simply look at the pivot. You have 2 candles up. That up candle is haloed in a down 3 line. So what it's doing is it's telling you beforehand it's going to roll. Your first down candle, you're into the downside. Now you can't take this counter trend move. When I show you the full platform, you'll see that the overall trend is down. When I provide market structure, the 50 and the 15, which are part of the platform. So these 3 up candles are simply, they may stop you out of the short trade. No big deal. You'll exit the trade with a lot of profit. Then you get order flow turning. But then right here, you know it's going to fail. Take the next candle down and you get the big move down. Now you get an up candle with a down halo. Order flow is still putting significant selling pressure on the market. But there's enough buyers here calling a bottom using some other system that are telling them the market is fallen as far as it's going to go, and they're going to take it long. They're almost always going to lose here, and you're going to just come in on the down candle and ride it down further. Now, if you have a big risk, if you have a big risk tolerance, and you're not going to get stopped out on the up candle, I would have to go back in. If you're going to tolerate the up, you can take the trade all the way down. It all depends on your automated trade management strategy, how much risk you're willing to assume on the trade. So the workspace should be as clean as possible. This is my feeling. And there should be no data projected that distracts you. And since the 3 line is something that you don't look at anymore, if you want to, you can make it transparent and it disappears from the chart. Now the 3 lines here, you just can't see it anymore. And you can see the blue halo on the down candle. It gives you that warning. You're going to get the turn. First up candle, up you go. There's your counter trend traders. This counter trend traders right here. We're very happy to accommodate them because when we take this candle long, we're going to run them over. Now finally they find the top after messing it up a couple of times, but you can see order flow turns and it stays turned. The problem is you can't determine when it's going to stay turned. It turns here, but we're always going to be trading in the trend, and you'll see how we define the trend. Again here, now you always want to take low risk, high reward trades. This is a terrific trade short. Now this is an entry. Actually, it's not an entry. It's a counter trend. There's no entry short because the candle is highlighted in black. You don't have the 3 line with you. There's no entry here because the candle's highlighted in black. And you can see they don't go very far. And very likely you're going to get stopped out. Here's your low risk entry all the way down. Here, all the way down. Here, all the way down. And you just bypass all these entries. The counter trends and the one where the candle halos are black. Now, we do use an exponential oscillator, and although you don't absolutely need a signal to enter, but a signal does decrease the risk of a trade on an entry. Now, if you remember, now all of these blues have been removed. What these are overbought signals, which I've taken off. Now remember, above the 50, you can only go long, and below the 50, you can only go short. That's a firm trading rule. Remember I said we can only trade in the trend while the 50 green and heading up with price above the 50 determines the trend. And we're only going to trade in that direction. So any counter trend signal we get off the exponential oscillator, we're going to ignore. And it's going to give us counter trend signals we're just not going to take. But if we get an up triangle on a candle highlight and a candle rimmed in blue or highlighted in blue, we take it long. We get the candle highlighted in blue, up candle, we take it long. We take it long. We take it long. Now, you can see on this up candle, this 3 line was yellow because we didn't get the MACD crossover yet. but the MACD lines were still accelerating to the upside, which is why if you look at the first line of the 3 line, you can sometimes get a blue halo, even though that first line is yellow. It's not an error. It's simply the way we programmed the MACD to give you a distinction between the MACD line accelerating away from the signal line and the actual crossover of the MACD to the signal line. If you want to be even more conservative, you'll wait for the crossover. But I'm telling you, there's no need. Now, if you look at the longest trade, it's the one that comes closest to the 50. 50 is mean price. And there's always this desire for price to revert to the mean. When you take a trade off the mean or off the 50, that's where you're going to get your biggest runners. And you see, the tighter the trade was to the 50, the longer it went. And as price lifts off the 50, the less likely you are to get a big runner. Now, oscillators don't call overbought, oversold anymore. They're useless. You and I both know that a market can be overbought or oversold based on an oscillator assessment for hours, for minutes, hours, days, weeks, or months. So if you try to fade an overbought market, what you're going to wind up doing is you're going to wind up taking a losing trade for the most part. But what is important is to make an assessment of how far off the 50 you are. The tighter you trade to the 50, the more likely you are to get a long move. Now, don't worry about these. These are down blue arrows or blue triangles. All the traders in the room wanted to keep these overbought signals, even though we don't use them. We don't care if the oscillator gets overbought. So I removed them. Here's another example. Now, I'm going to show you the oscillator up close in a second, but we're below the 50. We only go short, and these are all the signals. You can see here's the long signal. We don't trade long. Here's the short signal. Down we go. Here's the long signal. This would have worked, but it's a counter trend trade. We don't take it. The short signal, we go short. The short signal, we go short. The short signal, that's a small one. And the short signal, we go short. The counter trend signals are unreliable. You're not going to take a long trade below the 50. That's just a firm rule. You're going to look for a short entry with the 3 line below the 50 and a long signal with the 3 line above the 50. And here's actually the oscillator. Now, every time the oscillator crosses the 50 line, the way we've configured it, you're going to get an up arrow. Every time it crosses to the downside, you're going to get a down arrow. And when it goes below the 20 line, that's when you're going to get your oversold signals, which I've eliminated. Here's that move to the upside. Here's the entry to the downside, the oscillator crossing to the downside. Now, the reason it's an exponential oscillator and not the kind of oscillator that you can pull off of Ninja or almost any platform is because price on Unorenco doesn't move arithmetically, it moves geometrically. I mean, every 2 ticks, every 4 ticks, every 6 ticks, depending on how you want, whether you want to trade a 2 Unorenco, 4, 6, you're going to get a new candle. So as price moves to the downside, that's not geometric movement. That's not arithmetic movement, it's geometric. If you have an 8 range, every 8 candle, every 8 ticks, pips, or cents, you get a new candle. Here, it's different. And the reversal candle is completely different than the continuation candle. So on an 8 range or a 15 range, every 15 ticks up, you get a move up. A 15 tick down gives you a reversal. That's not the case with Unorenco. So, I mean, We'll show you how to format this, and we do the whole formatting for you. And we've really optimized the size of these candles, but that's geometric movement. That's why this is an exponential oscillator. We simply took the oscillator formula and took it to the second power to make it move faster, because a regular oscillator just does not keep up, won't give you this entry right on the down candle. This is the entry right on the up candle. It's right where it crosses the 50. Right here, it's right where it crosses the 50. One tick off, one candle off, where it crosses to the downside. So we're working to give you entries, if there is one, right at the turn of price. Now I'm going to close the slides for a minute, and whoops, let me drop this and bring over a chart. Now this is crude, and you can see right here. Now here's a move to the upside. Now there are two additional indicators that I'm adding to this platform as part of the special. One is background bias, which is without a doubt one of the strongest parameters you can trade with. If you don't trade with this, you're going to have a problem. This is the multi-time frame alignment of whatever instrument you're trading to the upside. Now, if you're trading a 3-minute, it's going to look at the 9-minute and the 27-minute. To get this green, the 27-minute and the 9-minute, and your chart, the 3-minute, must all be aligned to the upside. The 50 must be green, the 15 must be green, and price must be above them both. That is the lowest risk trade you can take when you have a multi-time frame alignment in trend to the upside. This pink, and you're going to get a lot of signals in chop where there's no background bias, and we don't trade when it's clear. Then we're going to get a long signal with green background here. You don't have the 3-line here, and I'll talk about the pivots in a second. But you can see that green background is going to carry price almost always to the upside, because you have a multi-time frame, a higher time frame alignment to the upside. And the other indicator I want to show you is the pivots. Now, the pivot indicator on most platforms, let me find the pivot, traces off of the wick. And that is not correct. It should trace off the candle body. This is the easy way to do it and the lazy way to program it. But this is really where the sellers are. And if you go, let's see, we still have here's the pivot. It's just going up higher. But you'll see the pivots get hit multiple times and they don't break. Now, the other important thing is that a pivot is only broken when 2/3 of a candle body traverses it. If it just a tick pierces it, it's still there. All the sellers are still there. So it only will indicate to you that it's been broken when 2/3 of the candle body pushes through it. Now, we call that a pivot break, and a pivot break is a great entry. And I'm going to have a master class for all the people that come aboard. But when you take a pivot break, you're stopping out all the sellers in this pivot, and it tends to fire this trade to the upside. And even though you're appreciably above the 15, above the 50, you just can't take the long entry here because you're trading into resistance. You gotta wait till that resistance is broken here, and then up you go. And you can see the 3 line is telling you you have significant buying pressure. This down candle, black, no trade. Now, if you want a counter trend trade, which I don't recommend, there's your counter trend off the down, and the halo is magenta. But I don't recommend these trades. Now let me, I have to hit F5 here. Well, it's all right. See, and here's your perfect trade right here. I mean, these are your bread and butter trades. There's your entry, there's your halo, and there's your short trade. Just a gorgeous trade. You can't take this short because you're trading right into support of the 15. There's your perfect short trade. Here you don't have the 3 line, so you can't take it. Here you're going to get a small long trade. Now on the short side, we look for this color. When you get the pink, that means you have a multi-time frame alignment to the downside. And don't you want to take the lowest risk trades short? Here's your trade. Now this is a tough trade because you've got a pivot to break. You could take the pivot break, but it's a little bit off the 50. So this is your perfect trade. Unfortunately, this one does not have the 3 line. You can't take it. And we want the background bias. And here's another bread and butter trade. Well, we don't have the 3 line. Here it is right here. Now you can enter, here you can enter on the pivot break. Well, you know, all the nuanced trades I'm going to show you, but the very low risk, high reward trades are right here. Look at this trade. There's the signal. There's the move up. Here's the signal. You wait for the pivot break, and there's your move up. Can't take this trade long. You're into the pivot. Now you can still take the pivot break. Remember I said you don't absolutely need a triangle. You can't take it on here, but now everything's in your favor. You break the pivot, stop out all the sellers, and up you go. So those are your extreme, and if you look at these trades, the probability of taking a loser is extraordinarily low. As long as you don't trade into a pivot and you trade short below, long above, pink short, green, dark green, long. Now, you're not going to get every winner or every loser. That's the price you pay. Look at this trade. Short. Now, I don't know how far you're going to take this trade, but you have the potential to take this all the way. It all depends upon your risk tolerance. These are your bread and butter trades right here. And if you have the ability to withstand 1 or 2 up candles, this trade is going to be, from full excursion, is going to be an 81 tick trade. Here's the only point that's important, and that is the risk on entry is extraordinarily low. And that's all you care about. Now, if you're stopped out before you get to the bottom, you can always trade the pivot break, which I'm going to teach you how to do in the masterclass. As long as you've got the pink and you've got the 3 line, you can still take this trade short again. So I'm going to show you our offer, and then I'll answer any questions. If you want to see other instruments, I'll be happy to show them to you. I just picked crude because it's got a lot of volatility and a lot of movement. And you see almost every short trade that you get signaled into that fails is into a pivot. You're rarely going to get a free and clear trade that's going to take you short or take you long that doesn't have something above it or below it that's going to lose. It's very, very unusual. It's a very, very low risk system. And you can see I'm not cherry picking anything here. Long trade doesn't go anywhere. Order flow is black. Long trade doesn't go anywhere. Order flow is black. Can't trade it. Right here, no break of the pivot. See how it continues to trace? Can't take these trades here. You don't have order flow. And here's your bread and butter right here. They keep coming. And there's your trade. And once you're up this much money, it's up to you whether you want to take it out at the pivot or let it roll. You have a great trade. So that's the entire platform. And I do want to show you the offer. And it does come with the master class that I'm going to teach all of you come aboard, because there, besides this perfect entry on green background with no upside resistance, there are a couple other trade configurations that are also very, very low risk. Let me start the slide slow from the beginning and just scroll down to the offer. And I have to move way through here. Okay, so you get the software. You're also going to get 1 year of my options alert newsletter. That's only the first 10 people who come aboard. Today I close out, I mean, the options portfolio is doing amazingly well. Today I closed out a spread on Scott's Miracle-Gro. It's up $9 today. We were already well in the money on the position. That $9 of gap up today took Scott's Miracle-Gro through the roof, and the alert is 1 year. Now, I have a rapid results quick start guide. It's a video. I mean, you'll be up and running really, really fast. You'll just watch the video. It'll teach you how to put in the software, but Sergio will also help you configure everything. So it works perfectly on your platform. Now, it only works on Ninja 7 and NinjaTrader 8, but you have other options. You know, and also I have a best stock checklist where it gives you all the things to check off when you first start trading to make sure you meet all the criteria for a long or a short trade. And obviously you get free lifetime updates. We make it better, we give them to you for free. And you get, obviously, Rory's always here to give you great support. If you add it all up, it's a lot. And what we're gonna do is just give it to you for $497. Now, the first 10 traders get 1 year of the Options Alert newsletter. And we have sold a lot of them for $1,000 for 1 year. The offer expires on Friday night, August the 2nd. So let me answer any questions that you have. Hang on 1 sec. If you want to see other instruments, I'll be happy to show them to you. Okay, hang on here. Hey, everybody. How you doing? Hold on. I mean, there's a lot of questions, so hang on 1 sec. Okay, hey, Ken. Oh, thank you, Eric. I'm fine. Thank you much. Hey, good afternoon. Heinz, how is everything? Okay. Here's why, Mash, about the wick. The NinjaTrader will not hold the wick on a overnight. Like if you close your Ninja and open it, it doesn't hold it. But what we've created are special hybrid Unorenco bars. So you get a full wick. Let me see if I can give you an example. Let me close this for a second and go to the right edge. Now, I believe they're in here. If they're not, I'm going to show them to you. Hold on a sec. I didn't put them in. Let me put them in. Here's our hybrid candles. And then what I need to do is I just need to, you see how the candles become transparent? Now, if we go to the right edge of the chart, where price is forming, do you see how you have that inner wick? Now you actually know where price is. So everything becomes revealed to you. Now, I don't think we're the first people who have ever developed it, but right now, I think we're the first company that is actually using them. So you're actually getting to see where price actually is. So let's say you're looking for a pullback and an entry. You can see right here on this candle, you have the pullback. And look at this move. I mean, it's happening right now. I mean, you couldn't take this entry because it was above the 50. But as soon as it clears it, right here with pink background, you're in with the 3 line. And we'll see if it breaks the pivot. It's breaking the pivot. And still doing it. It's doing it live. So, and you see how you get all the inner wicks? Besides just getting the outer wick, you get the inner wick. And that's the hybrid candle. And it really is a significant value. You'll see in the master class how we leverage this wick. Because sometimes you can, you can trade a huge Unorenco bar. Let's say you trade an 8 Unorenco. You're going to have about a 35 tick space inside the candle body. Standard Unorenco will not show you that inner wick. Now, the only reason we don't have them here is because NinjaTrader will not hold on to them. If you close the platform and open it, the wicks that we create will not stay. And that's just Ninja, the way that's just Ninja coding. We can't fight that. Now, see, price is bouncing off of the pivot. It squeezes through, but it never gets through 2/3 of its candle body. All these other pivots would say it's broken. We're still tracing the pivot because all those buyers are still there. Even though sellers squeezed 1/3 of the candle body through, it's not enough. And price is jumping out of the upside right off the pivot. It's turned order flow, stochastic, and momentum. Only I would not advise a long trade when you have your 2 higher time frames aligned to the downside, like this with this pink. So hopefully that explains it, Mash. It is being recorded, Edward. 3 different color outlines on a green candle. I'm not sure what you mean by that, Mash. 3 different. You have to kind of, I just don't understand the question, okay, on a green candle. If you can just help me out with that, I'll be happy to answer it. The 2 SMAs, Aid, this one is a 50 exponential, on this one is a 15 exponential of a 15 exponential. If you put a routine 15 exponential here, it will not sit right over it. This has the stability of a 15 exponential. It has the stability of an SMA and the speed of an EMA. And I can show you that really quickly. If I put in a standard EMA, that's 15. You can see that, you see how price jockeys around the standard EMA? Just 2 candles push it down. Our EMA stays green and up. It defines the trend for you much better. The EMA also rolls too fast. Our EMA rolls slower. But when the trend picks up, it sits right over the EMA. So it's got the stability of an SMA and the speed of an EMA. And it's not going to get pushed up and down by just a couple of candles. And that has a lot of value, especially when you're in chop. So we created a special line, and that's also part of the platform. You get the 15 and the 50, because this is a proprietary line. You're not going to see that anywhere. And it does work better than the standard EMA. But you need an EMA for Unorenco, again, because it's geometric movement, not arithmetric. You got to keep up with it. You saw how fast this move down was, how fast the move up was. Every 2 ticks is a move down. That's a fast candle. Exactly, Raj. It's going to help you avoid losers. If everything is aligned, you get an entry signal, and you're on pink background for a short, green green for a long, relatively tight to the 50, and you follow all the rules. I'm gonna go over them ad nauseum in our masterclass. You're going to sidestep a huge number of losers. Just this indicator alone, I'm telling you, that puts you in the direction of the multi-time frame trend alone is going to factor out a lot of losers, because that's the direction you want to trade. That's why people open up multiple charts, because they want to trade in the direction of the multi-time frame trend. Here, you don't have to do it. It's projected right on your chart in pink or green. It makes it so much easier to trade. Yeah, I have to show Sam, because we're just playing around here. I'm just giving a webinar. Right here, I'm showing a 2 Unorenco chart. Now, if you want a 5-minute chart, you have to tell Sergio when you purchase, and he'll format the whole thing as a 5-minute. Right now, I can't do that because I don't have the inputs on the 3 line. But it doesn't make any difference. The time frame is independent. Your 5-minute, if you trade it, is going to look at a 15-minute and a 45-minute as your 2 higher time frames. It doesn't make any difference, believe me, whether you trade time, tick, or Renko, time, tick, or range. Now, let me just give you a hint about Renko. If you look at stochastic, you need 4 parameters to trade it. You need an open, high, low, close in order for stochastic to operate correctly. And on a Renko brick, you don't get it. And I see platforms that cost $17,000 that trade Renko and use some form of stochastic, and it doesn't work. The percent K line, which is what we're looking at here, no matter how it's configured, whether it's exponential or arithmetic, will not work because there's only an open and a close on a Renko brick. You need a wick to give you the high, low, open and close. That's why the Unirenko candles with their wicks make the whole system operate, because now there's an open close and a high and a low, and the oscillator can trace out an accurate percent K. That's the problem when these software sellers create software and have no idea what the actual indicator looks at, and don't understand the numbers that go into making it work right. So you can't trade Renko if you're going to use an oscillator. I'm pretty sure it works on a MACD and probably works on order flow, but it's not absolutely will not work on any stochastic. Larry, this is a 2 Unirenko. So it's going to the size of the candle, like if I change this to a 4, it's all going to be based on the size of the candle. Now, if you purchase the system and you want to come aboard and you want to trade time or you want to trade tick, Sergio will format for you. And you see how we lost the wicks because you're not going to get them. And background bias is set up for a 2 Unirenko. So we have to configure for you, and you have to give us an idea of what you're going to trade, and we will configure the platform for you. So you can see that background is not quite, it works, but it's not quite aligned anymore because I decreased the speed without changing the higher time frame speed. And that's what Sergio will do. And that's hard coded in. And if you ever want to change it again, Larry, you call us and we'll change it for you. Then just call us, Mash, and we'll fix it for you. If you don't see it, we'll take care of it. Oh, listen, it does make any difference. Let's pick a stock. Let me make sure my data, I have the right data feed. Let's pick, you pick any stock you want. What stock would you like? I'll pick one. Hold on a second. How about, you know what, we'll take, oh, you also get a month in the trading room with me. I forgot to put that in. So you're going to get 1 month in the trading room, and you're going to see all my trades, which is really going to help you a lot. But let's pick a stock. You know what? We'll pick Scott's Miracle-Gro. Now is up 10. We'll pick Planet Fitness. Bidu, B-I-D-U. How about that? B-I-D-U. You know what? Here, we'll do McDonald's. Search. We got McDonald's. Move it in. Is it there? Hold on. I hit OK. Okay. Now I should be able to see more than this. We'll pick Apple. Just wait for it to load. Now it's formatted for a 2 Unirenko. So I gotta decrease the speed. You want to you're obviously going to want to trade Apple on a slower Unorenco speed, but let me just set it right. And here's Apple. It's no trade. Well, there's your killer right here. This is at 1227. It's your first. You can't take it into the pivot. You got to wait for the breaker right here. Depending upon your risk tolerance, you can take it all the way down. There's your other trade. Perfect. Take it on the pivot breaker. Depending on your risk, you can take it right. Once you get profit on the trade, you have two options. You can close the trade at the pivot or hold your breath. Your stops at break even. You've locked in profit, and maybe it'll just walk through the pivot. You don't trade into it, but you can occasionally manage through it if you want to. So that's two perfect trades. Now see, loser, right into support. You can't trade it. Can't take this trade. It's right into support. And here's your killer trade, right here. You've got room. And at the pivot, you can either close it, hold your breath. I would hold it and go down. If you have the risk tolerance, you can take it all the way. The point is, right now we have not found a loser. Here's support. There's your short trade. Absolutely can't take it. It's right into a pivot. Right here, there's the pivot. Can't trade it. There's the pivot. Can't trade it. There's a lot of trades. Look at this trade. Got to trade around the pivot. Right here. Up you go. So, I mean, you could get multiple winners. But the key, Larry, is that it doesn't hand you losers. And I'm telling you, that's as valuable as getting a winner, is you get to sidestep losers. And that's the number one thing. You know, sensitivity is the ability of software to get a winner. Specificity is the ability of software to allow you to avoid a loser. Software should always be tilted towards specificity. Now, the more specific it is, the more winners will go past you. So you can't make it overly specific. But if you hit the right balance between sensitivity and specificity, and then there's only one other parameter, and that is prevalence. And if you understand this as a day trader, you're gonna have it in your head, and that equals your win percentage. So it's sensitivity over specificity times prevalence. Now, when is it most likely? When is the prevalence of a winning trade most likely to occur? It's most likely to occur in a multi-time frame trend. So you're taking a trade on the side of specificity, looking to avoid a loser when the prevalence of getting a winner is the highest, and that's going to push mathematically your win percentage up. So as long as you have discipline and patience, you're gonna do real well. You're gonna get very few bad signals, and very few webinars I've seen show you the platform, just rifle through it and let you do this. I mean, they just put up JPEG after JPEG or just one area of the platform, and that's all they show you. because I've seen tons of software that really kind of stinks, but they show you a great area. They don't let you know that if price gets oversold, it can be oversold forever, or overbought, it can never stop. Because a lot of it is predicating at buying off the bottom and selling off the top. So when it gets into that red zone, it always falls. And when it gets into the blue zone, it always goes up. That's just not true. And if you squeeze this, which you can do, you can see every single short pivot here. Now here's on the pink, short pivot, 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 right here. So if you want to trade Apple, and you can configure the platform just like this, what you're essentially doing, those arrows or those triangles are giving you sequential lower. That's wrong. It's the wrong line. They're pointing out to you. They're saying, look, you're getting sequential lower highs and you're getting sequential lower lows. And if you develop the ability and talent, and there's no reason why you shouldn't, you're going to get in somewhere here. You can take this trade all the way down to here. That's $2.16. And you know what the risk is on this trade? 13 cents. So you make $2.16 on a risk of 13 cents. Calculate the risk to reward on that. It's unbelievable. So it gives you the ability to do that if you want to trade stocks. I mean, that's like a 75-to-1 risk to reward. So you have to take 75 losers to give back the money, maybe even more. I don't know. Well, probably, no, it's not 75, but it's a lot. Larry, it'll work only on Ninja 7, Ninja 8. If you have Thinkorswim, it will power this for free. And if you get a demo, it will power the demo, and you can take the signals off of it and take them on your Thinkorswim platform. I mean, that's what I do. I have Thinkorswim, and when I trade stocks, I just have my TD Ameritrade data feed connected to this. And there are a few other platforms. CDN, I'm not that familiar with. I'll just read Ken's remark. Ken's been with me for a while. He's right. I've been with you for quite some time now, Mark, and I never get tired of hearing the logic behind our system. It is marvelous and the only system I have used in 15 years of trading that builds confidence and provides extreme percentage ratios of win to losses, 0 to 85% on a very regular long-term basis. Great to be with you, and it's great to have you, Ken. The pivots I'm talking of are right here. You see these red lines, MASH? Right here. Those are the pivots. They're red if they're sellers in the pivot, and they're blue if they're buyers in the pivot. Yeah, it's right here. Right here. You can see all the pivots. Remember, they're stopping all these trades, and they're preventing you from taking any of these trades short, because you'll be trading right into support. And we never anticipate a pivot will break. I used to think on the third hit it'll break. Now, it's just better to trade around. We call trading around the pivot. It's much, much better. Sure, Peter. Right here. Dark green. And here's the only entry you have. There's the triangle. And you can see the candles haloed in blue, but you've got the pivot. So you just have to wait for the break. It's right here. And up you go. Here you can't take the trade. Not only do you have the pivot, but the candle's haloed in black. So you don't have the 3 line. Here you have the candle, you have the entry, but you have the pivot right above you. And look how far the trade goes. It goes right to the pivot, comes right back against you. So if you would have taken it, it would have been a loser. But if you took this trade, it wouldn't have been a smart trade because you don't want to assume this risk. Why bother? Wait until you get what we call trading around the pivot. And you can take it here. Here you get the signal, and up you go. And I'm telling you, you do this over and over and over again, and it's going to keep working for you. As long as you have green background and order flow, stochastic, and momentum, and a pivot break is a great entry because you're stopping out all the sellers in the pivot. They help push this trade long. And you've got a tremendous amount of buying pressure here. It's never going to stop these traders from giving you these little counter trend moves. What we have to do is exploit them by waiting for the pivot to break and then run everything over. And what we're really doing here, we're trading, smartly. We're running over all the traders in this down candle, in these 3 down candles, and we're running over all the sellers in this pivot. That's a lot of sellers. So when we break the pivot to the upside, we got a nice push, as well as we're trading in the direction of a multi-time frame trend that can only be created by institutional money. Only institutional money can give you 3 time frame alignment, along with a multi-time frame alignment of order flows, stochastic, and momentum. That's why these trades work. So I hope you see the rationale. There's nothing hidden here. This is no black box system. You understand exactly why the entries are successful. You're leveraging the traders caught in the wrong direction, and you're taking an entry that's either got a triangle for a stochastic crossover or an oscillator crossover, or if you get the signal, you're just waiting for the green light on the pivot break. There's one more entry I'll show you in the master class, and I'm not hiding it. I'm already running 28 minutes late, and if you don't come aboard, it won't matter anyway. But there is still one more entry that's very low risk. And to show you really quickly, it's simply a pullback inside the candle, because we're going to be able to see these wicks. And if you're not in the trade, you've got lots of sellers. I call this a bear failure, and you just keep going up. It's very configurable. Well, why don't we go to the E-mini? See what happened to the E-mini on the FOMC. I wanted to trade that. We got some nice trades. But I mean, we didn't get a lot of great volatility, to tell you the truth. Here's 2 o'clock. Now this candle has to be changed. This is a 428, and we do all of this for you because there's less volatility. So these are essentially what we would have gotten at 2 o'clock. Nothing here. There's your perfect short trade right here. Perfect. Got all these long traders to run over. There's your triangle. 50's down, 15's rolling. Plenty of room to the pivot, all the way to here. If you wanted to trade through, you got it here. Then you've got a pivot and you cannot trade it. And the break of the pivot doesn't have order flow. No trade. Here, you just miss by one candle. Background bias comes in right here for a long trade. This short trade, look at order flow. Look at background, nothing. So you would have gotten this trade, and that's it. That's it, 2 o'clock. No other trade. But the key is no losers. No ability to take any losing setup on the FOMC. And just for the heck of it, we'll take a look at the NQ, because that's what I like to trade in the trading room. And that might have gotten a lot more volatility than the E-mini. We'll take a look. Nobody's going to demo their software better than this, because if this gave you false signals, they would be right in your face. And I'm going to change this to a 5-2-10. That's the size. And you can see the NASDAQ is moving. The NASDAQ is moving like a, it's moving very fast. Now, unfortunately, no trades here because there's no background. There's your short trade right there. Whoops, it's a green background. Let me just refresh the chart. It is. You can only take it long. And there's your long trade right there. Up. Now, you would also take this up. No short trade here. Nothing in here. No background, no trade. No order flow. No 3-line, no trade. No 3-line. There's your 3-line. There's your break. And there you go. Nothing to trade here. Can't trade anything. Even if it's a beautiful trade, can't take it because it's got too much risk. There's nothing in here to trade. No 3-line, no 3-line. Boy, oh boy, is there a movement here. There's a trade right there. And down. I mean, there are multiple trades. The goal of the system is to give you consistent winners, but more importantly, prevent you from taking losers. I mean, I want you to keep that in mind, because it's extremely important. I mean, a lot of software is going to show you they're great winners, but they will not show you their ability to avoid losers. If you took this trade right into a pivot, bounce. Bounce. Short, right into a pivot, bounce. Short, goes through, but there's no background. There's just no way to take a long trade here. So, I mean, the NASDAQ is a very, very fast market. You're going to get lots of opportunities to get trades, but it's going to prevent you from taking a ton of bad ones. You're also going to have to pass up some winners, but that's a small price to pay for sidestepping one ton of losers. Here's a short trade right here at 953. Right to the pivot. Here, can't take it, right into the pivot. See how many losers this pivot saves you from? 1 million. Here's your short trade right here. Now that's really not a short trade. So one thing I'm going to tell you is the 15 has to be below the 50 on a short. The 15 has to be above the 50 on a long. So this is not a short. This is not a short. And this is not a short because the 15 is above the 50. This would be a short, but look at the order flow. It's black. Okay? I just want you to see all, I mean, you know, I'm showing you as much dirty laundry as I can, but there's very little to show. Addie, I just did in a live market. We just saw a crude trade go flying. And if we look at the right edge, I'll show it to you right now. Look at this long trade right here. Incredible trade. Right there. All these trades, no trade long, no trade long, no 3-line. You can't take a short on green background. There's your only possible trade. And it's a beautiful long trade. And there's the market moving on the right edge. I mean, you can see it. I mean, I think, FOMC volatility is pretty much played out. But there it is on the right edge. I mean, this just happened a couple of seconds ago. It's moving like wildfire here. There's your pink, and there we go. That's what we're looking for. Once you get that multi-time frame alignment to the downside, look what happens to price. Finally hit. This was a tough trade to get into because there was no pullback. But you see what happens when background turns pink. Price just flies down. It's still going. Look at this trade. Now you could get in right here. I mean, there's your live trade ad. You have the 3-line. There's your counter trend trader to run over. That's the trade I was talking about as the additional configurable trade short. You don't need the oscillator on this trade. And look at this trade go. It's 1 million ticks. I mean, it's like, it's 100 ticks. So there's your live trade. You don't get to see that often. I already showed the ES, Tom. The ES was much calmer and just gave you one winner. Now you see the 3 lines turning. You can't go long. The background's pink. You can never trade long on a pink background. You can only trade short. And now we're starting to move sideways. Nothing you can do here. This background controls the direction that you have to trade. The multi-time frame trend is still aligned to the short side. It's starting to turn because it got clear. And if the NASDAQ moved up anymore, it would start to turn green. And we're heading back down again. There's the pivot break. It didn't go very far after the break. It only went about 6 ticks. Not a far move. But this thing is moving way too fast. I wouldn't trade. I'll tell you, honest to God, I wouldn't trade the speed. This one is really rough. Now there's your pivot break that just flew right here. There's your signal right there. I mean, if you wanted to see live winners, I mean, this is it. Here's your live winner. This is about the third one right here. Just got to wait for the pivot break. That's a big move down. This one is tough into the pivot. This one's tough into the pivot. Got to wait for the pivot break. You can see it's not breaking. It's turning on the pivot. Stay away from these pivots. Here's your pivot break and a big move down. Listen, we're trading the Fed, so you know you're gonna have quick trades, and you can always trade a slower candle. It won't matter. I'll show you the offer again. You know, you get, I mean, Rory's the best. You get free upgrades for life. You get our best stock checklist, which you're gonna have to check off all the things you want for a short, all the things you want for a long, on all of our configurable trades. We give you a video so you can set yourself up, but if you can't, we'll set you up. You get the first 10 get a year of my options alert newsletter, which I'm telling you, we're doing extremely well. I'm a really good options picker. Today, we had a monster winner, 200% on Scott's Miracle-Gro. If you look at it today, I think it's up 11 points. It gapped up this morning 6 and never looked back. It is still flying. I bought it about 3 weeks ago. And then you get the software. And we're including in the software the pivots and the background, which we don't normally do. So you get all that. And the background is really, really important. And look what's happening now. Short trade, can't take. Short trade, can't take. Short trade, can't take. Short trade, can take. And you get another winner. I mean, if you doubted that the software works, I don't know how you could now. Because there's the winner. Right there. What can I tell you? Can't trade into a pivot. I mean, it's flying. It is a tough go. But multiple winners. And honest to God, I don't see a loser. I really don't. So I'm just going to move that off, and I'm just going to put the slide over there. Not hiding anything. You've been watching it for a long time. I just want to put our phone number in there. That's all. If I can find it. There we go. Hey, Jan. I just put 1 million NQs in there. I can't show DGAZ, Larry, because I pay Kinetic for 500 tickers, and that's not one of the tickers I get. Otherwise, I'd be more than happy to show it to you. I don't. Let me make sure I don't get it. Let me go to my tools and my instrument manager and see if DGAZ will come up. DGAZ. Remember, when I trade stocks, I trade them off of Thinkorswim and use NinjaTrader. See, DGAZ is not one of the tickers I get. Hey, Don, you're looking at it live. I mean, You just saw it take about 11 trades. I can't think of anything more live than this. I mean, it's as live as it gets. There's another winner. There's another winner. This one's tight to the pivot on the pivot breaker. It's another winner. Honest to God, you make a fortune here. And I'm not kidding you. There's another winner. I mean, how much live you want? I mean, you can see every counter trend trade you just ignore. Do you know who's taking these trades? Everybody else. And you're using these people to run them over. All these traders caught long here. Why the heck are they calling a bottom? We're in short. There's calling another bottom. We're in short. There's another bottom. We're in short. There's another bottom. We're in short. It's crazy, but that's what they're doing. Ah, Ted, you're so funny. Ted says the offer's so good he wants to sign up again. No, I'm sorry, Ted. We don't allow that. Just call Sergio. I'll call Rory. Jeffrey, just call Rory. He'll take care of it for you. It's not. It's just one payment. If you call us at 786-732-4656, Jeff, he's there. Let me hold on one sec. Okay, Jeff, the payment link is in the chat window. If you see it there, right in there, you got it. And if you have any, honestly, I think we've already sold 7 or 8. So if you want to get that year, and I never say this, of that options alert. I mean, and you like the platform, it will work for you. Hey, Gary. It includes the pivots, Gary. Everything I never show something you don't get. It includes the pivots. We're putting them where if I didn't include them, I wouldn't show them. It includes the 15, the 50, the background. Everything I'm showing you here is part of this. So I'm not showing anything you're not going to get. 8 Unorenko just means every time you form a new candle, you've moved 8 ticks on a trend mash. Now, Unorenko metrics, so they take a little while to learn. I'm going to go into that in the master class, the metrics of a Unorenko candle, and you'll see. Man alive, look at this. I mean, it's another winner, and there's no way to take a loser here. You have no ability to trade this thing long because the only background you have is pink. And this trade right here, right into the pivot. Here's the breaker for a short. I mean, what can I tell you? I mean, if you want to see it, I mean, I cannot believe. I mean, I wanted to go back into the trading room and trade this report, and I could have made a lot of money, but I'm here. Yes, Jim. If you previously purchased, you get the master class, of course. Great, Roy. Great to have you aboard. Yeah, you get a master class, JT. I mean, it could go 2 hours or 3 hours, as long as you guys need. I'm going to go over everything. I have my own master class just for training. I do 5 classes, and they average 2.5 hours a class. Now, they're supposed to be 1 hour. For the first 4, they're 2.5 each. So we're already at 10 hours on 4 classes. This master class will be extensive, and I'm not going to end until everybody's questions are answered. So don't worry, you're going to know everything there is to know about the software. Plus, you're going to trade with me in the room for a month. So you're going to see all the trades evolve. Sure, Roy, hold on one second. Confirmed, Roy. You're confirmed. No, my pleasure. JT, this is the NQ. You've been looking at it. I know you put it in at 208. It's now 250, so. No, we don't, Roy. We use the same one. You're good. I trade the NQ in my room, JT. I do. That's a future, Al. I showed you Apple. I'm telling you, they all trade the same. They really do. I mean, if I hid what was up here and you couldn't see that, it wouldn't matter because they really, really all trade identical. When I said that all these forces are the same, I'm telling you, order flow, stochastic, and momentum, and the multi-time frame trend move every single financial instrument. That's what's going to tell you how price is going to move off the right edge. If it did 100% of the time, we'd be perfect. But it does a very, very high degree of the time. Larry, those weren't minute charts. Those were Renko charts. So it's impossible to know in retrospect. If I would have known that when I had Apple up, I would have been able to tell you. Those were not fast trades, Larry. You could have gotten those trades easy. Yes, we set up everything, Don. Sergio's a master's from Florida International University in computer programming and coding. He's a genius. He'll set up everything for you. Don't even worry about that. I'm telling you, people do make a killing on stocks. And remember, I'm telling you the risk to reward on these stocks. On a 2-unit Renko, your risk is 13 cents. That's your stop. And that is a mandate. I'll show you that in the master class, exactly how you set a stop on a unit Renko. It's a reversal candle. And a reversal candle on a 2-unit Renko is 13 ticks, 13 pips, or 13 cents. So if you lose a trade, you lose 13 cents times how many shares. If you get 2.5 points or 2.25 points, it's a lot. You were, Roy. I can confirm that. I don't have a link for 7 or 8, Larry, but it's really easy. Just go to Google and put in NinjaTrader 7, NinjaTrader 8. I've got my Google Chrome all tied up. It'll bring up the platform and then it'll say download a demo. It's very, very easy. And you can just download the demo. It's very simple. If you have problems, just call us. We'll do it for you. Exactly, Nash. You got it. The stops are a reversal candle, Dave. That's what we do. Now, other traders do it differently, but in the room, I want to be out on a reversal. If I'm out on a reversal and the trade is still good, I'll go right back in. So if one person comes in and reverses the direction of the trade, I'll let them take me out, and then I will go right back if I need to. And remember, I go back in with those traders in the counter trend direction who took me out, and I'm going to run them over. So I'm going to teach them a lesson. That's just the way but I'm very conservative. Other traders will tolerate a reversal, but that's just the way I do it. Yeah, Larry, It's 786-732-4656. Just call us right there. Okay, it does work fine on FX. I mean, I don't have a Forex data feed configured, but I'm telling you, it works really good on Forex. No, I do, Stephen. I use an NQ2 Unorenco, so I did have the right one. Again, your exits, Roy, we're going to give you recommended exits for the instruments that you trade. You have to tell us what you want to trade. We're going to give you an automatic trade management strategy. We define the exits based on the average true range of the instrument. And I'll teach you all about that in the master class. I mean, what is how far is the market likely to move on a given trade? And that's going to be one average true range unit. And that's how you really do it mathematically. So what we do in the office is we calculate one ATR unit for the instrument that you're going to trade. It's not that difficult. The problem is you have to do an ATR unit that goes back 3 to 6 months, because the ATR unit changes from day to day, but it doesn't change over a long period of time. So your exit is likely going to be one average ATR unit, but on stocks, it can be 4 to 5 ATR units. On a leveraged instrument like Forex and futures, it's always one ATR. If you try to go for more than that, you won't reach it. So you want your targets to be achievable. Now, a few people in the room don't have targets. They just keep going until they get a reversal. But I just like to have targets. But we're going to give you all those options. Thank you, Aid. It's good to have you. Thank you, thank you, thank you. Yes, I mean, the background color is based on what the higher time frames are doing, Mesh. They do not look at your trading chart. And anything that looks at your trading chart beside the exponential oscillator is of no value at all. You can have 1,700 indicators. If they assess price on your trading chart, they have no forward-looking ability. None of ours do. Oh, you don't, I mean, you can configure the background color to be anything you like. I put pink and green. I mean, like dark pink and dark green. You want to change that, you can. Those colors are all configurable. I would trade it to a 4 Unorenco, JT. You'll see in the room. That's what I trade. And I'm telling you, I just lost 1 million winners here. It would have been a little bit slower than the candle that you saw. And there's another bunch of winners. Now, this one you can't take. You have black, but there's a winner. There's a winner. There's a winner. Now, the background is green, so you can't take these trades. The background's reversed. Let me see here where it changed color. So we got this huge move up. So now it's going to take a little bit of time for the background to go to pink. But that's okay. Our goal is not to get every winner. It's to avoid almost every loser. And we're not going to trade short on a, see, we're losing that green. And eventually, if the NASDAQ rolls, we'll start, now we're going to look for a long trade. And here's it's starting to get choppy. But at this point, I'm telling you, if you're not done, you're crazy. I mean, there were like 15 winning setups, maybe a dozen. And it's still moving like crazy. We'll look at it before we end. Oh, I can't do that, Roy. I would never mention your name or anyone like that, even first. but you're in, you're fine. That's exactly correct, Nash. Software, training room, everything, 1 month, $497. And the room's $199 a month. I mean, we've really given you a really great introductory offer. Yes, all those pivot breaks draw automatically at Aid. As soon as price breaks the pivot, it stops tracing. None of this is retrospective. None of it. This offers $497. The month in the trading room is $199. I have 150 traders in that room that pay that every month. So the introductory offer is really inexpensive. And the reason I'm doing it is because I believe that once you come aboard, you'll be with me forever. And that's, really my deal. Great, Jeffrey. Great to have you. Sure, Gary. Everyone's going to get a replay link. Thank you, guys. Thank you, JT. Paul, hi, Mark. The system is fantastic. I cannot recommend it enough. I never traded futures before joining Mark and the team. If I can do it, anyone can do it. Believe me. I am in the UK currently trading the NQ. I am trading with a small pot and been trading now live for a week, and I am up 500 bucks. I also have to say that support from Rory is fantastic. Paul, thank you so much. Hey, Roy, if I ever tell you you're going to win 100% of the time, click me out, because you do not. You're going to take losers. It's part of trading. You just want to make them as infrequent and rare as possible. That's all. You're never, if you get 100% winners, you're trading with 100% sensitivity, 100% specificity. Your prevalence is 100. And essentially that's like, infinity. So it's never going to happen. Aid, he's going to call you. Once Sergio, right now Rory's on the phone, as soon as he's done, he'll get all the people who signed up. He'll call you hopefully today, if not first thing in the morning, set you up with Sergio and get you all configured. Believe me, everybody will get a phone call and everyone will get to Sergio very fast. Now, Sergio goes home in 1 hour, but I promise you, everyone will be configured by tomorrow early afternoon. When you say one better than the other, Larry, I'm not sure which one you're comparing to. Ken used the system today, picked up a couple of $100 on a 4 Renko NQ. Congrats, Ken. Sure, Dave, it doesn't, listen, it doesn't know whether you're trading the regular futures or the micro futures. They move exactly the same. It absolutely does. My pleasure, Roy. The master class will be early next week, Mash. I'll try to do it for Tuesday. Remember, the offer ends Friday night, so we'll set it up for very early next week. Ken, nice. Ken finished just under 500 bucks with no losers. Congrats, Ken. No, Aid, you can trade 15 instruments if you want. We'll configure them all for you. In fact, you can trade Forex, stocks, or futures. It makes no difference. You can trade more instruments than you can watch. After the first, okay. Mash, if you can call me tomorrow, today's going to be really bad. I promised the trading room I would go back in there and trade the Fed announcement, and I left them all stranded. and I have to go in and apologize to them. But just call me tomorrow, like around 1 o'clock in the afternoon Eastern. I will have finished trading, and we can talk as long as you like. Sure you can, Don. If you speak to Rory, he'll give you all of our information for that. Not a problem, Don. We've had lots of people do it like that. You're going to get it, Peter. Do not worry. Believe me, Rory is really excellent on that. Same number on the slide, Mash. 786-732-4656. And just tell Rory it's Mash on the phone. So when he tells me there's a Mash asking for you, I'll know exactly who it is. Okay? Not a problem. All right, everyone, listen, thank you so much for coming. I really appreciate it. I really take it personally, and I'm really going to do my best to make all of you lucrative traders. And the masterclass, I'm going to show you how. All it takes, I'm telling you, is just patience, because you're going to get your winners. Don't chase anything. If you think it has just a little bit of risk, and don't, what kills all these traders are FOMO, fear of missing out. They jump in on marginal trades and they take losers. We are not going to do that. We're going to take losers, and they're going to be perfect trades. That's not a problem. And we're going to do that in the room. No, Karen. Now the volume on the E-mini is 12,000 shares a minute. Yeah, it's going crazy. I'm watching it on a higher time frame, and it is going nuts. It was a great opportunity to trade, but it was great to be with you guys and ladies. So listen, Rory's going to give you all a call. You're going to be in the room this week, and I'll see you there. And have a really, really wonderful evening. And thank you all so much. Bye-bye, everybody.